Ladies and gentlemen, for our upcoming panel discussion entitled The Race Between Cybercrime and Payment Security, please welcome our moderator to the stage, Naniki Ramabi, the Chief Risk Officer at Payements Association of South Africa, followed closely by her panelists, Savi Gnai, the Head of Risk at EMEA for the London Stock Exchange Group, as well as Andrew Henwood, the Director at Black Rhino. Welcome.
Morning, everyone. If I'm audible. Hello, morning. Morning, everyone. And I must say it has been a very interesting morning, very insightful discussions happening. So our topic for today is the race between cybercrime and payment security. I think if you think about what the previous speaker spoke around, whether payment systems can enable economic growth or can it be a burden or even, cause it to fail, you actually think about what is it that you are doing from a payment systems point of view in terms of innovation, and also understanding that as we innovate in payment systems, also the criminals are doing their own innovation on the side. So one thing I've realized over the years is that trust is important, whether in your personal life or even in doing business or anything else. So as we innovate, if what we innovate cannot be trusted by the potential users, we have an issue in terms of whether they'll utilize it or not. Now it brings us to our topic of the race between cybercrime and payment security. What does it mean, basically? So Andrew, starting with you, your thoughts around this?
Thanks very much, Naniki. I think when I first saw this topic, something resonated with me. I've been in cybersecurity for a while, and one of our favorite sayings is that there's no destination. There's no end goal. So calling this a race, if we call it a race, it's a perpetual race. It's ongoing, it's going to be continuous. And I really loved what you brought in about the trust aspect. We have to, whatever we do within this payment ecosystem, we have to ensure that cybersecurity balances out with the usability and the feasibility of the functionality of that platform. It has to go hand in hand, it has to be continuous. So calling it a race makes me a bit nervous. It feels like there's an end, there's a finish. And I think we're going to be doing this for a long while, if not forever.
Definitely. Safi?
Yeah, and is it working?
Yeah.
Yeah, it is working.
And I think it's also changing. So to your point, it's like what we have seen over the time is like when you look, there are a couple of surveys out there, when you look at payment fraud, where it really happens, and fraud in general, you would have thought is probably in the more less developed countries, but actually it's not the case. So we see, so I'm from London, when you look at the map of Europe, Middle East and Africa, it happens in very sophisticated countries. So to your point, it's really, it might be a race, but an eternal race, so it never ends up.
Definitely the race doesn't end up. It's even more than a marathon itself. So maybe starting with some of the impacts that you've seen in terms of cybercrime and fraud, what is it that you've observed over the years as key trends in this space?
Well, what we are seeing in the market or in general is it is an evolution. So cybercrime and payment fraud is really changing over time. A couple of years ago, the way people were conducting money laundering were really taking the suitcases cross-border, and then most of the times it was Luxembourg and Switzerland, these kind of destinations. But then over time it changed into credit cards. So the majority of the fraud happened really within credit cards. So stolen credit cards, stolen identity. A couple of directives in terms of two-factor authentication helped to stop that. And then it then now moved in the online banking, especially with post-COVID. So we see most of the fraud are really happening within payments is online. Instant payments, I think these are the things we will still discuss, but we see, and again, it's really not a race, it's really it's a catch-up game. So it's like now it's like online, and then we see SIM cards scams. So it's really changing. So criminals are very creative, and it's really, it depends who has the first step. So it's the financial institutions with the creativity, or the criminals. So it's a balancing act.
Definitely. And Andrew, you have observed stats locally. Please share some.
Yeah, absolutely. And I think before I do that, I think we need to be cognizant that the bad guys out there, the hackers, the cyber criminals, these guys they're running this as a business. You know, they're only doing this because they're looking to make financial gain out of this situation. And you know, worse than that, what we're seeing globally, and I'm sure you'll support this in your observations, you know, outside of South Africa, these are not individuals. These are literally organized businesses that are focusing on cybercrime because it's so incredibly lucrative. And I think I'm very fortunate that our friends at Cybercrime, I brought some statistics. They released their annual crime statistics report. Very pleased to say last week. So very fortuitous that I can read off some stats here. And I think some of the key findings are quite significant for us as an industry here in South Africa. And before I say that, I think let's also recognize I've worked overseas for many years, and South Africa has a very sophisticated payment system. The banking platforms and the online presence and the ability for the banks to do things digitally is quite advanced in the context globally. But what is quite frightening from the Cybercrime stats, digital banking fraud is the #1 increase of reported incidents. Year on year, from 2021 to 2022, they saw a 36% increase in reported incidents. And I think here's the big one that blew me away, is gross reported losses. And the emphasis is on reported. I think you'll have a comment on that in a short while. Gross reported losses was almost R750 million. That's up 68% from 2021. You know, that for me blew my mind because those are reported losses that are coming straight off the bottom line. So if you want to know what the cost to the local economy is, I mean, we've got a fantastic statistic there. And to your point, Safi, you know, what are the big drivers for this that Cybercrime said? It's social engineering type attacks. It's phishing, spear phishing, vishing, smishing, all the different types of phishing, the cell phone attacks, business email compromises with fund transfer fraud, push transfer fraud. Those are the areas around digital banking where we're seeing the significant increase in these fraud statistics.
And Andrew, that seems like a lot, but I think there's also a perception out there that do we know whether this is all the fraud that's reported? So even though there's an increase, but there's always a notion that this is actually, there's a lot under the carpet that we're not seeing. It's an iceberg, and obviously there's a lot more in terms of the fraud that gets reported at the banks themselves, and also when it goes to the bank, what goes to Cybercrime because of the whole investigation and whether the client compromised their credentials or not. And I think what I've also observed is the screen scraping risk, where you find that because of the modus, the mode in terms of which you do payments online, you actually compromise your credentials without knowing it. And as a result, when you go to the bank and you claim, it's repudiated, you know. So those are things that still go unreported, even though there's crime that the customer suffered. And to my point, trust gets depleted in terms of, do I trust these payment systems or not? So maybe on that note, Safi, what do you see as payment channels that are prone to fraud or to cybercrime?
I think you brought up a very good point when you, in terms of is everything reported? It's a question of trust. It's like when you look at APP scams, for example. So these are authorized push payments, so authorized by yourself or by myself. So it's really, it's very difficult to get the money back if you authorize a payment to a payee, which turns out to be a criminal. So we see. So to all the things you mentioned is, I think what we are seeing in the market is, again, people are getting very creative, and people are looking for the weakest link in the chain. So it's like in the past it was really about the online. So it was about the technology. I think that improved over time in terms of there are new analysis where you can analyze the behavior of a customer. You can analyze the devices the customer is using. To give you one example, so I'm based in London, and when I authorize a payment through my laptop, and my laptops are their settings is for Hong Kong settings, and I'm doing a transaction at 2 a.m., which with an email I created yesterday. So these are the data people were analyzing. It looks like a bad transaction. So, but with APP scams, is getting that's the latest. So to your point, so I can give you even more horrible numbers from the UK. It's like we are getting to 500 million losses in British pounds with APP scams. So I think these are the things, and at the end of the day, it really comes to two things: differentiating between a good customer and a bad customer based on trust, and the second thing is really how secure you want to make your house. So the front door. So you want to completely shut it down and make it very, very difficult to get into your house. So a lot of authentication. Or you believe, and these are the two thoughts, you believe the authentication or the proof needs to be at the point of payment. So before the payment is initiated, then you do the check. So I think I'm a firm believer of passive authentication, which really gives you, keeps the balance between a customer journey and really less friction, but also do your checks. And a couple of things probably we will discuss is really how to find the balance in this space.
Definitely.
Naniki, if I can comment on that.
Yes,
quickly.
go ahead, Andrew.
I think I'll pick up on something you said there, which really resonated with me. We need to, again, let's put our mindset back into an attacker, the bad guys. These guys are inherently lazy as well. So going on what you said there, Saifi, if you've fortified your front door, they're not going to go through the front door because that's difficult. It's more difficult than trying to find a side entrance or a subsidiary or a third party. And where I'm going with this is this whole concept of third party risk. So the bad guys, the threat actors, are gravitating towards the other channels that allow them entry to, for example, your organization. And I think because of that laziness, that inherent laziness that the bad guys are seeing out there or are perpetrating through, it just makes sense that we take a more holistic view to establish that the trust is maintained across that payment ecosystem.
Yeah. I mean, I can give you one example, a SIM card fraud, for example. So just imagine it's like someone is calling the telco providers, look, I lost my SIM card, and then you're getting a new SIM card to the fraudster. So if you're a customer right now and you want to do OTP checks, or one-time password checks, and just imagine before executing on the payment, the institution, the financial institutions, is sending an OTP. Well, guess what? The OTP would go to the fraudster. So because he changed it, he has the SIM card. So it really doesn't make sense to send a text message to the fraudster. So it's like you need maybe a phone call, maybe an email confirmation. So you need to be very cognizant in terms of a risk-based approach. What kind of checks in order to stop the criminals are required within each step, rather than having a blanket approach that I'll send 7. I mean, if you send 7 OTPs, one-time password, to the fraudster, I mean, he would be very happy to get these text messages all the time.
And I guess we're doing this whilst you're trying to make sure that you maintain the costs of, because there's costs linked to security. The more you try and make sure that you enhance your security of your payment systems, there's a cost linked to it, and eventually that cost has to go somewhere. But there's also the seamless part of things where you don't want to actually have security being a burden in terms of adding all these complications. So I guess this is a lot and it's overwhelming, and when we look at how innovative the criminals are, so where do we start and what can we do about this?
I think the most effective ways which we are seeing when we work with our customers, really a couple of things. One is really understanding the customer, and then really understanding the customer's behavior. So are you sending to your mom every day at 2 a.m. some money? So understanding the behavior. And one way of authentication would be the device you are using. So your cell phone, for example, so that could be one way of authentication. But then it's getting tricky with the APP scam. So it's like if you're getting a call from your financial institutions, or you think it's your bank, it's like your account has been hacked, so we need to transfer your account. And then it comes the APP scam. So one way in order to, and I can give you some examples from the UK, where what the UK has introduced a couple of years ago is really from the regulator is the COP. So a principle called COP, confirmation of payee, which really now I think it's more than 59 institutions participating in that. It's basically the ability for a bank to really check the name, the sort code, and the account number. Because in the past, what happened, or still in some countries, it's like when I transfer money, the bank cannot change. So it's really impossible to check the payee. But with COP in the UK, we see definitely, I wouldn't say it's a silver bullet, because it cannot handle cross-border transactions, for example. But we see definitely success in the financial sector. So I think it's reversing the trend when it comes for some financial institutions. In London, for example, COP reduced the fraud element by 35%. So I think coming back to my statement is really a risk-based authentication. I think that's the key in order not to kill the journey. So you can let people in your house, but it should be the good people coming into your house rather than the bad people coming into the house. So just locking the front door and no one has access to your house, I don't think it's a good idea.
Exactly. Thank you for that. And Andrew, if you look at some of the case studies in terms of curbing financial crime and fraud, what can you share with the audience?
So, Naniki, there've been some interesting things happening this year. It's not so much a case study, although it is becoming a legal case study, which is a little bit unfortunate. Some of you may well be aware of I won't mention names, a very large law firm that's not far from here that was involved in a fairly large dispute with one of their customers who was paying for a house transaction. And what is super interesting about this particular case is the person purchasing the house made a payment against what was purported to be an email from the legal firm. And as happens in many of these cases, we just heard the Cybercrime statistics. It turns out that the email was fraudulent. It was a business email compromise, and the bad guys were in the customer's system. They'd compromised the email of the customer, they changed the payment details, and obviously the payment had then been made to what looked like the correct account, but obviously the account number was changed. Now, what is incredibly interesting with this legal case, one would think that, well, the onus of responsibility is with the end consumer, the client, who made the payment to make sure that those details are correct. But that's not what the judge found. The judgment in this particular case has found that the law firm was responsible for ensuring that their customers are sufficiently educated to appreciate that email is not a safe mechanism to make payments or take payment instructions from. And this has far-reaching consequences because not only am I as an organization now responsible for my own security, for my environment, but I now have an obligation, according to case law in South Africa, to ensure that my customers are also securing their systems. Now, not necessarily securing those systems, but at least you must have educated them. And it goes back to what we were talking earlier about what can we do? What can we do as an industry to kind of mitigate this? Security awareness training is so key across the board. And I must say that, having been in cybersecurity, maybe I'm more open and more acknowledging when I see these educational and awareness messages that come through. But every time I make a payment now, every time I log into my internet banking, every time I go to the bank now, I'm seeing posters talking about cybersecurity, talking about the risks of making payments online, really insisting that people authenticate the payment request. And I will caveat this by just mentioning that case, it is obviously up for appeal, and I do want to stress this case and this associated case law is contrary to anything else across the world. I know for a fact in the UK, for example, if the onus of responsibility is on the person making the payment to ensure that the payment is going to the correct place. So this was quite a surprising verdict here in South Africa. But as I say, from a case perspective, I think it's really shook certainly the legal fraternity for them to acknowledge that we need to do more. Now, the banks, I think, are in a really great position. Certainly the folks in the payment industry are very well aware. We've had PCI for many years. So I think from that perspective, there are some great initiatives already in play. Dare I say, we need to do more.
Definitely. Saifi,
Yeah, if I can add, so we talked about the retail side a lot, but there is also on the business side, so the so-called the CEO fraud, right? It's like I think that's equally important because you wouldn't think that you think people are criminals, but you would not link a company, a business to a criminal activities. Usually it's right, single people or standalone people are doing criminal acts. But what we observed I think it was in the UK, the so-called CE fraud, where really someone is with the email and everything is like, I'm the CEO of this company and we have a supplier and we are late with the payment and we need to have the payment right now within the next hour. So that's an APP scam, a classic APP scam on the business side. So it's not only the retail side, but it's also on the business side, corporate side happening. So because by definition, because a corporate is registered, you would trust a corporation more rather than individual. I think this is some kind of false assumption people are having.
And it does create a bit of an urgency, do this and do this now. It's so urgent.
And it's the CEO.
And
it's coming from the CEO.
And you want to, not to have an insubordination risk. So you want to actually do that. And I think it brings me to one of the questions raised by Anonymous, saying, how do we equip the general public not to fall prey to various methods deployed by cyber criminals? To your point, they are innovative. They find new ways. You close this loop, they go to the other side. How do we do that? And do we feel that banks and other payments providers as a whole are doing enough? Or is there more in terms of collaboration? I heard when we spoke about authentic collaboration. How do we do this?
I think Andrew mentioned a very good point. It's the educational part. So it's like in some fraud schemes, the weakest part is the customer. So it's like educating the customers. I think it's a very important. So it's a very important task, not only for financial institutions, but all players in the market. I think that's crucial. And then when it comes to technology, I think to have the right technology in place, the things I mentioned in terms of behavioral analysis. So it's like, how is this customer behaving over time? It's like, again, I gave the example of an email. Was this email created last night and now he wants to send money? Or as maybe if we think about the futures, it's like maybe the digital footprint of the customer. So it's like, has he got any subscription with Netflix or has he any with Sky? So it's like, what is the digital footprint? So, and then what is the digital journey of these people? So you can, I think you might be in a position to understand a pattern rather than just a single action where you need to do a couple of checks and you are not sure what checks at what time. So a behavioral analysis a passive authentication, including some behavioral analysis, I think would be a good step. And then, of course, bringing the industries together. So I mentioned the UK example with the regulator. So when you have these services called COP, confirmation of payee, you are definitely reducing APP scams.
And Andrew, your thoughts on this?
Yeah, I think, again, I'm going to put my mind back into the hacker's perspective. Remember, these guys are innovating. They're just like we're at a conference to talk about payment innovation and the balance. These bad guys are having similar conferences to talk about innovating different ways to attack the system. So there will be a continual cycle of improvement we need to do around cybersecurity. So we've talked about security awareness training. I completely agree with Saifi. If we can do more behavioral analysis around transactions, for example, if you are receiving an email from the CEO, he's never asked you to do a payment before, and it's super urgent, and it's probably in a language that he would use, but if you've never received one, you should be naturally suspicious. And there's a lot of automation you can bring in from a technology perspective to be able to do that. Now, the challenge with that, though, is that's great from a business perspective. How do we now get that education down to the consumers? Because that behavioral analysis on a consumer side is far more difficult to achieve. Having said that, I'm a firm favorite. Email, I think one of the big things, if I can give you one thing to take away from this conference, is never trust email. We all use email, but don't trust it, because email is inherently insecure. I mean, it's a protocol that's been around since the beginning of the internet. It's very difficult to secure and to validate the authenticity of who's sending you the email. You cannot work out if it's been tampered with along the route, and it's very difficult to differentiate. A lot of these bad guys will impersonate a domain to look very similar to the domain that it's purporting to be coming from. So, take one thing away: don't ever trust email. And if we can get that message across down to a consumer level, which I think the banks and many of the payment industry folks are doing a great job of, we need to perpetuate, we need to emphasize that, we need to accelerate that. And I'm just picking on email. SMS, you can probably have a similar example, in terms of compromise.
It's on the email side, I completely agree with you. It's like I got an email from FedEx a couple of days ago, and it was really, I just wanted to check the sender. Is very, very difficult. So this is so professional. So you have to be very careful in order to see the full email address. But by doing this, you already clicked somewhere. It's already late. So it's like, I agree with you. So emails are very tricky. But again, I think you mentioned this a couple of times in terms of trust. You think if you're getting an email from your bank, from a government, it is serious. So it's an inherent trust in these organizations. So it is a tricky one. But overall, so I think you should be very suspicious getting an email order or confirmation. So
I like that. Be naturally suspicious.
Yeah.
I think that's the key word here. I say don't trust email. If you we all work on email daily. You don't want to see, I think I'm up to about 60,000 on my inbox at the moment. So I use email extensively. But if I get a payment request for any sum of money, I'm naturally suspicious. So I like what you said there, Saifi.
But people are playing with the fear, right? So if
Absolutely.
you don't make that payment, this and this will happen. This will be the consequence, or you will go to court, or whatever, or we will turn off this and this and this. So people are playing with fear.
It's fear and the urgency, and even playing tricks with your mind, because if you don't act, something negative is going to happen.
And actually, Nanika, if I can just quickly mention, so I know I'm picking on email, but let's extend this as well. I really love what you said about being naturally suspicious, because when I read the Cybercrime report, one of the big areas of growth, and ironically, this is quite close to my heart. This happened to my father, who's actually in the IT industry. He received a phone call from someone pretending to be from his bank. Now, they knew his bank, they knew his bank number, which is not difficult because we've all seen the number of breaches that have happened in South Africa over the last couple of years. And these guys were super smart. And this is a phone call. This is not an email. And they perpetuated this theme of they were phoning him for a security reason. Mr. Henwood Sr., we've noticed suspicious activity on your account. You need to urgently take action. Please, would you follow this procedure? Go and log into your internet banking, confirm you can see this transaction. And then the kicker was they asked him for his internet banking profile and password because it had been compromised. Now, luckily, my dad is fairly savvy, and he recognized that should never be the norm. And I'm just quickly giving you the summary of the story. He realized it was completely dodgy. He phoned his bank. They locked the account, and he had to go and obtain new bank cards 2 days later. And sitting in the bank branch, there were 6 other people sitting next to him who were all suffered the same thing. The only difference was The other 5 of them that were sitting there had all suffered losses. And so picking on email, but this is equally applicable.
Yeah.
Be naturally suspicious. Unfortunately, the bad guys are incredibly good at social engineering, pretending to be doing good. And then it's a natural human tendency to want to be helpful. So, that's a thing I think we can all help by telling others, be naturally suspicious out there, because these bad guys are innovating all the time.
Yeah. I have a couple of questions that I would like to ask. There's one from Greg Kraft saying, could you elaborate on the vast increase in third-party security compromises? What would you perceive as the level of ongoing monitoring and analysis that could actually contribute to a tangible reduction in the attack vectors that are being utilized?
I think there are a couple of things. Is in terms of it's a question of authentication. So I think that's very important. So there are different ways of authentication. Again, it's like you close the door and you don't let anyone in, or you do really risk-based authentication. I think for me the most powerful is really behavioral analysis and the device analysis. So it's really a mixture of the equipment, the hardware, plus the person itself, the way he behaves. It is difficult, of course, if you have new customers where you don't have the history of behavioral analysis. But I think the strongest authentication would be really when you link the user to a device which is owned by the person. I think that would help a lot. From a regulatory perspective, I think COP would be very useful. It helped in the UK reduce the fraud by 30%. So it's really confirmation of payee when you have really an idea where the money goes. So that helps a lot. But it's at the end of the day is really to find the balance, a financial institution, how much frictionless customer experience, the journey you would like to give to your customers, and how much is really you want to authenticate is really, and that's why a passive authentication, I think it's the best authentication when the user doesn't know you've been verified. So it's like, again, you don't have to send 10 times OTPs. So it's like a passive way of understanding who is logging on. I think that would be the most powerful and less frictional authentication.
I got a question around that, explaining passive authentication. In simpler terms, what does it mean? There's a
passive authentication means when the customer doesn't know he's been analyzed. For example, the behavioral one, so or the device one. So if your phone is linked to your account, so and you are logging with your phone, so and then the bank knows this is so I'm Seifi Gunay is, and then I mean my bank knows the software I have on my phone. So it's like, okay, he's logging in with his iPhone 13. So if you have this information, you don't tell them before you log on. I said, look, I'm going to use my iPhone 13 in order to do a transaction. So that's passive. So the bank has the information that this phone, this iPhone 13, is linked to Seifi Gunay.
Okay, thank you for that elaboration. And Andrew, I have a question here from Paul, saying, noting inherent fear to approve messages or payment requests, how do you think as an industry we should approach the implementation of real-time payments or request-to-pay messages?
Sure, that's a complex one. So look, I think real-time payments are a whole beast on its own. If we think, I think a payment request has to be authenticated. There has to be a mechanism where you can make a determination of whether the payment request is legitimate or not. Going back to this data proposition, if you have sufficient data around that transaction, you can make informed decisions around it. Real-time payments, we'll have to have a careful think about that, but I'm always a big fan of trying to mutually authenticate a transaction. And an easy example here is if you get a payment request to make a large payment and payment details are on that email or whatever form you've received that payment request from, you need to validate it using another mechanism, not the email channel that you've received the payment on. So most folks out there will do something like a telephone verification. They'll phone the entity that's requesting the payment or you wishing to make the payment to validate via that secondary channel. And that secondary channel could be telephone, it could be SMS, it could even be WhatsApp. We've seen some solutions out there using WhatsApp and Signal and Telegram. So I think you have to try and gather as much telemetry and data around the transaction request as possible to make an informed decision. If you can't and you don't have sufficient data around that transaction, I think then you need to go to the secondary mechanism of authentication. Fully appreciate, kind of almost defeats the object of real-time payments. We all want to make payments happen quicker, but that goes back to this balancing act we talked about cybersecurity. We can make payments go quicker, but then there's potentially a risk that may be involved. I know real-time payments, I know in South Africa we do have the ability to now check accounts that you're paying to. It's not always the easiest. The one thing I've noticed is it's always hidden behind many different menus and there's additional charge for it. But if it's a big enough transaction, that possibly warrants it. But I think going back to data, we had a quick chat earlier about data. We've got to enrich our data. We need to be able to leverage off the data that we have access to. We need to ensure that we can trust that data, which is a challenge in its own right, especially as we start, moving deeper into the unbanked sector where that data becomes a challenge.
I think, see if you can go ahead, your views on this.
I just want to add something. I think we also have some events which really stretches or the whole technology area within the financial institution. So Christmas is one event where you see a lot of payments, for example. So that's a challenge that's a technological challenges. We have Black Friday, for example, where people are going crazy in order to buy stuff, and it's like this is our experience. From our customers, some of our customers we're getting calls. We said, look, we need to get ready for Black Friday. We are expecting huge traffic. So it's not only the data, but it's sometimes the technology is really behind when you have this crazy volumes for these kind of events. So it's like it's also needs innovation from software providers in order to have instant payments, where you have API calls, where you make them faster. So you don't want to have someone online waiting 5 seconds until the payment goes through. So you need milliseconds for. But when you have 1 million people buying the same stuff, then it's really a challenge. So it's also a constraint on the technology side when it comes to instant payments.
Yeah, exactly. Andrew?
If I can quickly just jump back, because you mentioned something here about software providers and third parties. I want to link back to that question from Greg Kraft. Thanks for that question, Greg. If you can grab a photo for my kids, would appreciate it. Thank you. But just quickly going back to that, third-party risk, software providers. I think this is a whole area. Remember the bad guys, I said it before, and I think we've all agreed, the bad guys go for the weakest link. They don't want to make their lives difficult. They're going to focus on where is it easiest for me to penetrate an environment, to compromise payments, to compromise trust. And I think one of the challenges we have at the moment in Southern Africa is we don't have true open banking yet. The banks haven't fully opened up all of their APIs and given access to all the folks. There's definitely strong movements in that direction. And I'm contrasting this to Europe. The open banking initiatives you've got over that side are extensive. And one of the challenges we have around this is if we're opening up access, we need to ensure that those third parties are handling that data appropriately. Are they protecting the data? Because that data is very sensitive. And the last thing we want is the bad guys to gain access to that data. And I suppose one of the things I'm super intrigued about is, Safi, can you comment on how, in terms of a third-party risk management, how is Europe, how have they managed that rollout? Because open banking has exploded over there. With the number of neobanks and new infotech, technology startups, all that kind of good stuff. How have they managed the risk around that?
It was to your point. It was open banking was a big driver. to really open it up. So for the neobanks, the challenger banks, or payment service providers in general. So we see even large financial institutions having their own fintech department. So it's like a payment service provider. So because after opening up, you need to make sure you are still competitive in the market.
Yeah.
So I think the challenge with this, and there is for the neobanks, for example, their value proposition is like you get an online account or broker account within 15 seconds. So that's their value proposition. That's how they market their services. So in order to make that commitment, you need to have a very strong backbone when it comes to reliable data. Because when you talk about the data, for example, when you do sanction screening, for example, it's like people have multiple careers in criminal acts, right? It's like you could do money laundering, you could do terrorism financing, you could do this and this. So when you do a screening, for example, you might get multiple hits. So that's a challenge, right? You have one software and you have Safegunai appearing multiple times. So how do you handle this? So that's a challenge. But I think it's really the technology itself. So there are new providers in the market which really help open banking, help these neo and challenger banks in order to have very, very fast solutions. So it's like this, what we are seeing is, I think it's also pushes the banks to have a similar capability. So, but I think it was a driver for new innovation.
Right.
I think it brings us to, when you observe this and what has worked in certain countries, there are key principles that one would think about: collaboration, security by design, making sure that you integrate security into the design of the payment systems versus an afterthought, and data, these data-rich systems, and making sure that the data is integrity is kept and you can utilize that to actually enhance your security. So in closing, I'm just looking out to see if someone is going to come and kick us off the stage. But in closing, just your high-level thoughts, very quick.
In terms of what exactly?
Like those key principles that you think can be the lever to actually drive security. And we know it's not a race, but actually to ensure that payment security is not far behind in terms of what the criminals are doing.
I think what we're seeing is like there are, in the past there were some countries like Switzerland, for example, a very closed economy, very scared of a cloud solution. So that was a good example where we see even in countries like Switzerland, the openness to adopt cloud solutions, because you really, for these kind of solutions, you need to be in the cloud. So it's very difficult to offer this one. And I think one way is what financial institutions, payment service providers can adopt the technology which is in the market. And the other way is really goes with collaboration, industry-wide collaboration. I think it is not solvable just by a financial institution. So I think you need to have two components. One is really what a financial institutions can do, and what can an industry, an association, a regulator can do to bring this together.
Thank you.
Right. Excellent.
I don't know if we do have time. I see the MCs there. But thank you so much for indulging us, and thanks
you
for the insight.